Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
It's a day of lifetime highs for our stock market benchmark indices. The Sensex and the Nifty, a 1,000 point of a rally has been already seen in the first 3 hours of trade for the markets. And it is nothing but the better than expected GDP numbers that has fueled the markets to all-time high levels yet again. Remember, last week 10 days odd have been days of consolidation on the market, sideways trade. A lot of speculation went on whether the markets will still have further legs to go ahead and go forward. And already we've seen a stunning rally over the last 6 months. So will this market continue to soar higher to even newer highs? Well, there you have it on your screens. We did see the number of 22,300 on the stock markets on the Nifty today in trade. A 1.5% of an uptick is what we saw. Slight profits being taken off right at the peak over those levels, but 300 points still on the upside that can be seen on the Nifty. Even the Sensex is up about 1,000 odd points. What's also supporting the index is all the sectors that are positive. The metals that are nearly 3% higher. So the Nifty metal index is shining the brightest in trade today, followed by the oil and gas space. That's also up nearly 2% odd. You have the private banks that are supporting the markets right from the front, 1.9% higher for the private banks. So stocks like ICICI Bank and HDFC Bank are coming back into flavor and are supporting the market move as well. You also have the financial services, the auto stocks that are driving in the faster lane, consumer durables, PSU banks, FMCG, mid and the small caps as well. It is a broad-based rally that you really see. So what are the key 4 factors that are really supporting the markets and this record move on the markets? Well, one, the better than expected GDP print as well. The Indian economy grew 8.4% in the October to December quarter, the fastest pace in the 6 quarters that we have seen. They also came in above estimates as well, and this was supported by the robust manufacturing and the construction activity. Also, secondly, it's the upbeat global markets, the positive global cues that we got overnight from the Wall Street with the Nasdaq record closing highs as well. All of those cues helping the domestic markets also inch higher in trade. So the Wall Street closed in the green overnight, with the S&P 500 and the Nasdaq composite settling at record high levels after the inline US inflation really came in as well. So that was the third key factor, encouraging US inflation data print. The in line with expectation US inflation reading aided the market sentiment as it kept intact the likelihood of a rate cut in the coming June month by the Federal Reserve as well, and that has been on the high hopes trajectory. The fourth key factor is the constant FII buying now. In yesterday's trading action, of course largely led by the MSCI flows, the foreign investors net bought shares worth 3,568 crores in the previous session, while the domestic institutional investors also sold about 230 odd crore rupees. In the month gone high, however, the FIIs have bought equities worth over 5,107 crores. This is a positive indication, even though the number is small, because if you look at the previous pulling out of 25,000 crore rupees from the domestic market, this sounds like a change of stance that the FIIs are finally doing. In the last 1 decade, remember, FIIs have turned out to be net buyers in the domestic stocks in the month of March on at least 8 occasions. So starting with the FNO series of March, this is a positive indication. With the FIIs coming back, US markets in fine fettle, US inflation data point in fine fettle, the domestic data point in terms of growth, a spectacular show there. And of course, we do see all the sectors supporting the market sentiments. Most of the experts who've been also critical about the kind of valuation concerns that have been there, there were some pockets that were also talking about a bubble getting formed in the markets, especially when we talk about the mid and the small caps after having rallied 50, 60, 70% odd. This GDP fine print can actually lend support to the valuations which is being commanded by the Indian markets as well. Now, when we talk about the kind of market cap gains that we have seen today, is to the tune of 3.2 lakh crore rupees already, and the market cap of all the listed companies on the BSE is now nearly 391.18 lakh crore rupees as well. So it's an all across buy zone that we actually can see in the markets. We will also wait for our guest to join in pretty shortly to help us understand which way are the markets really headed from here on, and which are the top sectors and the stocks that you should be looking at getting into right here. Let me quickly list out for you some of the big moves that we are looking at in the market. So on the Nifty, you have the metal names like Tata Steel, JSW Steel, Hindalco, the three big steel companies, metal companies that are soaring higher in trade. So Tata Steel is up by about 4% today. JSW Steel again a 4% upsurge. Hindalco about a 3.5% uptick. L&T, again, there is news flow, and there you can see 3.2% of an uptick coming in on this one. Apart from this, you also have Titan that's pulling up in trade. 3% of an uptick can be seen on this one. Then you have the private sector banks like ICICI Bank also moving up in tow as well. And the kind of moves that we are seeing is to the tune of 3% BPCL about 2.8% higher, and then you have Tata Motors also pulling up in trade. So you have the metal names, then you have the banking names, you have consumer durables, you have the auto names, all of them supporting the key move that we are seeing on the index today. Apart from this, let's also look at the public sector unit names that are actually supporting the markets, the PSU names that have had a stellar show in the past as well. So SAIL, for example, that's up by 6%, of course, with the entire metal move. Oil India from the oil and gas space is up by 5%. Then you also have the power financing names like PFC and REC also moving up pretty sharply in trade. And then you have names like NHPC, BHEL, all of them giving a strong show from the public sector unit basket as well. Let's welcome our guest on the show. We are now joined by Kshitij Mahajan, CEO of Complete Circle, with us. Thank you, Kshitij. Great to have you with us on Business Today TV. Historic day again. We have seen that the markets have climbed up to 22,300 odd mark in today's trade with this 1,000 point rally on the Sensex. And this follows the brilliant Q3 GDP data point that we had to refer to, 8.4% in yesterday's after market hours data that we really received. Tell us, what does this GDP print really show in fact with the markets going forward from here?
Oh, well, thank you. Congratulations to everyone. I think it's a big day, great day. And it really reflects when your GDP numbers are 8% plus for a quarter, that with a country like us where we have nominal GDP of now 12.5%, 13% we are eyeing now. So, what nominal GDP, just to make it easy for everyone, it's real GDP plus inflation. Normally, we were expecting 6.5%, 7% GDP and 5.5% inflation. But right now, it's 8% plus, and you can say 5.5%. So you can actually look at a broader market to also grow in line with what your nominal GDP is doing. Markets are nothing but a reflection of your economy, and that's what the GDP is all about. I think this is a very positive move, and it's a young India. Consumption is on high, and we are looking at a very positive sign here for the country. And this rally is broad-based rally, and believe me, many people are saying that there is a lot of froth. I agree that in some space there is froth, but there are some stocks which are well positioned and they are well supported by the earning numbers also. This is not a broad-based buying time. This is a time when you should look at different pockets. You should look at where the government focuses. You should look at where the PLI is, and just stagger your investment, because we have a big event coming our way, which is elections. So just stagger your investment, keep some powder dry. You'll keep on getting opportunities. Today is a day to look at a portfolio and feel happy about it, that you have some gains in the portfolio.
Absolutely. So we are backed by fundamentals in this kind of a rally, and that is a bit of a positive. But the view coming in that stagger your investments and keep a little bit powder dry, you will get many opportunities to even invest at these record high levels. I want to first bring in this question. Just weeks back when the markets were in a consolidative zone, we did see correction happening at least 2 or 3 days in a row in the mid and the small caps basket. There were these concerns, rising that perhaps the valuations are too overstretched at this point in time. We are looking at an overheated zone, and with the SEBI's move also coming in on the mid and small caps, a lot of investors were fearing if this is the right time to perhaps pull out their profits and look at, perhaps the markets looking at some correction. But clearly, the markets have their own way, and the macro data has supported it. Tell us, do these fundamental data points alleviate some of the concerns on the valuation front at this point?
So I think SEBI concern is right because SEBI is worried about retail investor, and it's a right move. But believe me, many of our fund managers, they are much mature and very good in their tasks. Many of the big small cap or mid cap space where we have seen a lot of money which is flowing in. There's almost like, just to take an example, Nippon small cap has more than 180 stocks. So I'm saying they are well diversified. They are diversifying now. My only concern is, and my address to everyone who's watching our show, that just don't look at return when you are participating into your investment products. Returns are in the past. Just look at what are the future prospects. If you want to participate in small and mid cap, you should have at least 7 to 10 years on your side, because these are the space which are meant for long term investing, not even 5 years time, because sometimes you see there's a lot of pain you see on these sector side. I will not advise people to book their profits in mutual fund, because that has been done by the fund manager himself or herself. They are doing their job at their level. But if you have some positions where valuations are not supported by earnings, and there is a lot of frost in defense as well as in PSU space, there you have to look into it, that whether you want to book or you want to continue. Going further, when you are planning to invest further, my sincere advice is that, like in normal fund, I will say that just go take 2 to 3 months to stagger your investment. In small and mid cap space, just take 5 to 6 months at least, because
Okay.
you will see some valuations, correction coming here. But yes, I see the concern is right. Having said that, it's a very evolved, fund management fraternity which is doing the right thing. So you can keep holding your positions, but for the additional position, just stagger your investment in next 5 to 6 months. Or otherwise, you can actually play small and mid cap space through a multi cap fund or a flexi cap fund also.
Okay, got that. Now, in terms of the pockets or the sectors or the themes that you're getting more positive on, I wanted to ask you, Kshitij. Now, we've seen sectoral rotation play out. We've seen several spaces. You also pointed out where the government focus is. So, the PSU names, they had their fair share of re-rating coming place. PSU banks really rallied up and about as well. We've seen defense, railways had their good share. We're finally seeing the private banks now come forward. Which are the sectors that you would continue to see opportunities in and bullish on over the next 6 to 8 months odd?
Well, I think energy is one sector, which is for
Okay.
sure is a clear-cut focus of the government. And you see, with energy, there's a lot of opportunity comes, whether it's clean energy or your fossil fuel energy. Point is that we are going to have 600 gigawatt of new plants coming up. And that type of energy, when you have been producing, you need all type of infrastructure setup to transform that to grids, and from grids to various other lines. So any companies which are working on that field, it will become very big. Auto, another sector, and we have seen our dominance not only in India but in Africa and few other continents also. I think auto space also, as clear-cut manufacturing focus is there of government. They are saying today we are contributing 14% of total GDP through manufacturing. This will go to 25% in next 5 to 6 years. So second is manufacturing, which will become very big. In manufacturing, you can look at pharma space, you can look at textile, you can look at auto space, you can look at electronic space, where India is gaining very much. Actually, if you ask me, if you look at various PLI sectors, which are 13 sectors, if you look at those spaces, you will find your bets. Now, banking today, many people are saying that there are certain banks who have not done well. Bank on an average, they have to keep SLR and CRR as per government, but they have almost 27% of the book as SLR and CRR. Now, when rate cuts will start coming, this
Yeah.
money is parked in government securities, and when rate cut will start coming, their treasury will have income gains from it. So you can actually look at having some participation in bank also. Having said that, those times have gone where you have 35 40% participation of banks as part of Nifty. We will have other sectors also which will keep on doing well, but yes, banking for sure we are looking at. So manufacturing, banking, auto space, clean energy space, and anything to do with housing also. So housing also is very important. Now in defense, when people are saying that defense will do well, and it will do well, but then you have to look at those businesses where turnaround time is less, where turnaround time in terms of the realization of payment is less, or those businesses which are gaining not only from selling equipment but also gaining from their servicing also. Let's take for example Hindustan Aeronautical Limited, and there is no recommendation here. I'm just taking a quoting example. So they supply helicopters, planes, and other instruments across world to many countries. So their 35-40% of revenue comes from servicing them. You know, their annual maintenance, what they are doing with these countries for their shipments. This is something which they are. It's like a recurring income which they are having on an annual basis. To look for those businesses which are right now available at good valuation, supported by earning. If you like something and it's not available at right valuation, then maybe put that business in your dream list, wish list or dream list. And once you have the right valuations coming your way, or market opportunity data hai, matlab, you will see that it will keep on giving opportunity to all of us. So then only buy. The problem when you buy something really costly is that the gestation period and time increases. So I think just don't swear by what is happening, what people are saying, including me, but do your own due diligence and look at the right set of companies with supported with right valuations.
Okay, just two more questions which are follow-up from, I'm taking a cue from what you really said. One, you did not mention semiconductors. You know that that is
Yes.
what the government is now getting bullish on now. It's also cleared some of the plant formations as well. But do we have enough listed opportunities when it comes to semiconductors? Maybe a lot of investors would be keen on playing this theme for the next 5-10 years. But how does one really go into, we don't see too many listed players right there in the Indian markets thus far.
So semiconductor becomes a part of EV only. I said EV. So, you know, as a whole,
Yeah.
it becomes a part of EV. And government has now assigned a designated area in Gandhinagar where we have a focused clear-cut tax slopes for companies who are going to come up with semiconductors. So I will not quote here, but you know, broadly you'll see many of the big players, including many of our auto manufacturer,
Yeah.
will have in-house facility where they'll work on their semiconductor part. So you will see listed names coming into this play, and it's just a matter of time. So, you know, we also keep on looking for ideas where we have this play, but sometimes if there's no direct play, you can have a quasi play. Like someone asked me that how I can play infra. I always said L&T is the best way. If you don't want to play L&T, then play cement, play FMEG, play tiles, play, let's say, steel. So there are ways through which you can play the sector. There are quasi
Okay.
ways. So I think sometimes if you don't have, then just play, look at which are the market leader in right now in India in auto EV
Yeah.
manufacturers. Then you can look at, okay, Tata Motors is doing fine. Again, there's no recommendation. Mahindra and
Sure.
Mahindra are looking at building up space. So all these type of businesses you can look at.
Okay, and the next portion that you mentioned was on the interest rates, and perhaps that is something that everybody is looking at. The recent US inflation print does give us some hope that perhaps there will be a positive commentary on a sooner rate cut happening in the US Fed. Now, we all are keeping a keen eye on when that happens, because once that happens, it would be a worldwide phenomena again. Central banks across the world would start to look at interest rates on a downward slide. How would that really propel the markets even further? Do you think we have enough room, despite the kind of valuation concerns that were there, that once the interest rate cuts start to happen, there could be another leg of an upside? If that happens, what's the kind of view you have on the markets?
That's a very good question. And, you know, if you ask me, I'll make it very simple for everyone. Once you have rate cuts happening in US, you know, when rate cut happen, you not only gain for coupon, but also from capital appreciation. Just to make it simple, you have a 100 rupees bond whose coupon is, let's say, 8%. When rate cut happen, the new bond comes at, let's say, 7% coupon, 1% less coupon. But the erstwhile, you know, your bond get adjusted with the new price, and your 7% coupon will become 101 rupee. So you gain on the price of the existing bond. So you not only gain from the coupon, but you also gain from the existing one also, price also. So when rate cut will happen, when most of these FIs and FPIs who are parking a lot of money right now in US bond market, because 5% pay, if you have a modified duration, which term is there, which measure price sensitivity vis-a-vis rate cut, they normally make 9 to 10% in US market without any currency risk. Now, this year, you will see inflow of almost 30 billion USD in India in bond market, because Indian bond has been included in JP Morgan bond index and Bloomberg bond index. So
Yes.
that will stabilize your currency also. Many people have not noticed, but if you actually see from 84, slowly we are down 83, and this always starts happening in May. The market start discounting it. So currency is stable. Now, when they have their part of money which has been already made in US, they will start again looking for emerging ideas. What better than India right now? What do you have in BRICS? Brazil commodity, Russia right now in trouble. It's India, China. People have some mistrust since the COVID thing has happened, and then you have South Africa, which is very small. Moreover, South Korea is moving from emerging to developed economy. Their percentage of emerging economy also will get divided in India, Vietnam, Bangladesh, Malaysia, Thailand. So you'll have much more money moving in equity as well as bond market. Now, when you have opportunity lying in a country like India, where you have a stable currency situation, let's say in next for a couple of years, you will see inflows coming in. So, you will see that whether in bond market or equity market, we have a lot of inflows coming in. So US rate cut will trigger rate cuts in India. It will create a lot of money for people in gilt and bonds also. So on a lighter note, many people are keep on investing into equity. I can tell you, if you invest into a gilt fund, Government of India Securities Fund, you might have a double-digit return in next 1 year time.
Wow.
Okay, and then sovereign guarantee is there. So I think that's again an opportunity. But in equity also, I see a very positive momentum and inflows from outside India. You see, in 2022, there was more than 40-50 billion dollar of selling by FI, but hardly 70% correction is there. All thanks to our retail participants. Now our SIP book has bulged to 19,000 crore, and this will become 35,000 crore next couple of years time. So you'll have $4-5 billion coming from retail participation, which will support the market. So we are very positive on India. But again, when you are coming to market, your expectation should be that if you make 14-15% in the morning, that's a very good return.
Yeah.
Don't expect for doubling every second year or third year. I think the realistic return expectation should be 14-15%, and still you'll double your money in 5 years time. Which asset can do that?
Absolutely. Wonderful speaking to you, Kshitij. Thank you so much for taking the time out and speaking to us, helping our viewers really understand what is really moving the markets right now, where are we at and where are we headed, the best ways to navigate through at record high markets. Many thanks for joining us on this special edition. All right, let's quickly look at the markets now. 320 points higher, again at record levels is what you see the Nifty at. 22,302 can be seen on the Nifty. Remember, these are the levels that you've never seen before. 1.5% of an upside is what you can actually see. It's the Nifty Bank that is pulling up all the markets higher today. The Nifty Bank Index is now 2% higher, and that's the one that's moving very, very strongly because of its heavy weight. Let's quickly look at the top contributors right now in the market. In terms of the top contribution that you see now in the markets, remember in the morning session when we were talking about it was L&T. Now it is ICICI Bank. Look at ICICI Bank. It's 3% higher right now. 1,084 currently. It's now contributing 51 points to the Nifty move as well. There is a 300 point of a move on the Nifty. 50 points are being seen from ICICI Bank. The second key factor is Reliance Industries. 1.5% of an uptick from this one. 35 points being contributed by Reliance Industries. The third is L&T with 35 points again. HDFC Bank is contributing 31 points. ITC is contributing nearly 15 points. Axis Bank is contributing 13 points. Then you have SBI and Kotak Mahindra Bank as well. 12 points each being contributed from there. So the banking space is taking the lead. Heavyweights like Reliance Industries, ITC is taking the lead, and the metals pack is also shining pretty bright. It's an all across the board kind of a move that you see on the markets right now. All the sectors have pulled up massively into the green, barring just the IT and the healthcare pack that are sluggish in trade right now, but rest of the sectors are very, very strong showing on the markets right now. With that, we wrap up this very special trading session, but do stay tuned on to Business Today TV as we will continue to get you all the market moves and what's really buzzing in this market and where are the opportunities existing for you as an investor in these record high markets. Stay tuned.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.